Hi, I'm Christine Short, Director with S&P Capital IQ Global Markets Intelligence. In this week's Lookout Report, we provide a wrap-up of first quarter earnings season. With over 90% of S&P 500 companies reporting for the first quarter of 2014, the blended estimate currently stands at 3.3%, in the initial range of 3 to 4% that Global Markets Intelligence predicted at the beginning of the season. Despite a 4.5 percentage point improvement in growth from the trough of negative 1.2% seen on April 10th, first quarter still marks the weakest quarter for profit growth since the third quarter 2012 posted 2.4% growth. Earnings per share also remains suppressed at $27.58, missing last quarter's all-time record by 89 cents. Regardless of the fact that 68% of companies beat their profit estimates for the first quarter, and that analysts are expecting much improved growth of 7.5% in the second quarter, company-issued guidance has been egregious. Of the 466 companies that have reported, 101 have issued guidance for the next quarter. 88 of those have been negative, 12 are positive, and only one in line. This produces a negative to positive ratio of 7.3, the second highest figure since the fourth quarter of 2013 reported a negative to positive ratio of 8. It's important to note, however, that although the fourth quarter 2013 had the worst negative to positive ratio in our 15 years of data, earnings growth still ended at a very respectable 8%. This highlights a trend we continue to see in which companies lower guidance so much so that they easily beat on the bottom line. Revenues have improved in the past couple of weeks, now pegged to come in at 4% for the first quarter. This is still below the 15-year average of 6%, but a great improvement from the results seen in the last 2 years. This is the first time since the second quarter of 2012 that analysts expect sales growth to outpace bottom-line results. Top-line growth has been driven by utilities and consumer discretionary, two sectors that have also reported strong profit growth during the quarter. Expectations for the second quarter have fallen to 2.5%, but analysts anticipate the second half of the year will rebound to the 4% level. Looking ahead, 22 companies are scheduled to release results next week. A majority of the reports will be coming from companies within the consumer discretionary sector, including Urban Outfitters, TJX Companies, Target Corporation, Gap, and Ross Stores, amongst others. I'm Christine Short, and thank you for tuning in to this week's edition of the Lookout Report.